Hey everyone, welcome back to the channel. Today we're going to talk about one of the most explosive stocks in the entire AI space right now, Micron Technology, ticker symbol MU. Micron has been on an incredible run this year. The big question is, has it already peaked, or does it still have significant room to grow over the next 1 year, and even the next 5 years? Let's break it down step by step. As of late February 2026, Micron is experiencing what could be described as one of the strongest growth phases in its entire history. The stock started 2026 at around $315 and recently reached an all-time high above $437. As of February 20th, it's trading around $428. That means about 50% year-to-date gains and over 333% total return in the past 12 months. This isn't just hype. It's backed by serious financial momentum. In fiscal Q1 2026, revenue surged 57% year-over-year to $13.6 billion, while operating income jumped nearly 200% to $6.1 billion. And here's the key driver. Micron has officially sold out its entire 2026 supply of high-bandwidth memory, HBM3E and HBM4. That's critical. AI-capable servers require massive amounts of memory. As AI models get larger, memory becomes a bottleneck. And right now, Micron is one of the few companies that can supply this advanced memory at scale. Because of the supply shortage, Micron has unprecedented pricing power. Some analysts even project DDR5 prices could double again by the end of 2026. This is not the old cyclical commodity Micron anymore. It is increasingly becoming a core AI infrastructure supplier. Now here's where it gets really interesting. Despite the massive rally, Micron still trades at only about 12 to 13 times forward earnings. Compare that to NVIDIA trading around 25 times forward earnings and AMD around 32 times. Even Micron's own trailing P looks high at around 39 times, but that's a lagging metric. If projected 2026 EPS of around $33 materializes, the PE effectively collapses to a bargain level 12 times. Historically, Micron's 5-year average PE was about 15 times. Its current price-to-book ratio of roughly 8.2 times is well above its 5-year average of about 2.0 times. That tells us the market is pricing Micron differently now, not as a commodity memory maker, but as a specialty AI bottleneck supplier. This is what some analysts call the valuation paradox. It looks expensive compared to its past, but cheap compared to its AI peers. Looking ahead to the next 12 months, Wall Street expects Micron to generate roughly $33 to $34 in earnings per share for fiscal 2026. That represents more than 330% year-over-year growth. Consensus price targets range widely, with top-tier analysts setting 12-month targets around $500, and more aggressive projections reaching significantly higher if Micron begins trading closer to broader NASDAQ multiples. Now here's my weighted 1-year target. I combine 3 major factors. Earnings power, weighted at 40%. Analyst consensus, weighted at 30%. Supply constraint and pricing power, weighted at 30%. Consensus EPS for fiscal 2026 is about $33.73. If we apply a modest re-rating multiple of 18 times, still below the NASDAQ 100 average, the price target comes to roughly $607. Balancing both bullish and conservative scenarios, my weighted 1-year target range for Micron is between $560 and $650. That suggests there is still meaningful upside from current levels around $428. Now, let's look at the 5-year outlook. The long-term case for Micron rests on its transition into what I would call a non-substitutable AI bottleneck. By 2026, AI data centers are expected to consume roughly 70% of all memory chip production. This trend is projected to persist into 2027 and beyond. The data center AI chip market is forecasted to reach $1 trillion by 2030. Because every advanced process requires matching memory, Micron is positioned to sustain momentum as the global AI fabric expands. Factoring in total addressable market expansion, continued EPS growth, and incorporating a 20% cyclical discount to account for potential normalization post 2028, My weighted 5-year target range for Micron is between $780 and $950. This assumes Micron maintains strong margins and remains central to the AI supply chain. Now let's talk about the risks. While the outlook is predominantly positive, there are late-cycle risks to consider. The memory industry has historically been cyclical. If AI demand weakens unexpectedly, the currently elevated prices for DRAM and NAND may not be sustainable. If hyperscalers like Google, Amazon, and Meta overbuild infrastructure and later pause memory orders, pricing could normalize quickly. Additionally, normalization of the market after 2027 could lead to valuation compression. So while the upside potential is compelling, this is not a risk-free investment. Micron today sits at a very interesting crossroads. It is no longer just a DRAM supplier. It is increasingly positioned as a critical AI infrastructure component, potentially a structural bottleneck in the AI supply chain. With strong earnings momentum, locked-in 2026 supply, and a forward PE near 12 times, the stock still appears attractively valued relative to many AI-focused peers. Of course, this is just my personal analysis and not financial advice. Please do your own research before making any investment decisions. If you made it all the way to the end, thank you so much for your support. If you found this video helpful, please like the video and subscribe to the channel. It really helps the channel grow and allows me to continue creating deep dive stock research like this. Thanks again for watching, and I'll see you in the next video.